B-I-N-G-O, B-I-N-G-O. I guess any ticker could be called B-I-N-G-O. Does not matter what it stands for, does not matter what it's about. It's just a ticker. You give it to your trading software and you place an order based on what? Based on these little candles. Alright guys, I start off with the higher trend and I'm getting more and more used to it. When I open the chart on the 10-year monthly candles, right away, if it looks great on the monthly candle, it looks like a stage 1 or 3, you know it's going to look awesome on the 5-year weekly stand ready, stage analysis ready setup. And I don't know, this just caught my attention. This stock is just WJX. All right, first I'll tell you what this is. It's Wajax Corp. Cool. That means absolutely nothing to me. And look at that beautiful head and shoulders. Double right shoulder. And look at that. Let's get, this is the greedy target. There's targets that are there's patterns that encompass bigger patterns or smaller patterns, and the closer target, the closest pattern to the breakout line has more probability of reaching its possible target. So you see that right shoulder, this little consolidation top, reaches target way faster than the big target. You remember, these are monthly candles, goes down, then 1, 2, 3, 5 months, it goes sideways and drops a little bit. Oh, goes back up, then drops a lot. And did it reach its target? Ooh, maybe not. Look at that. See right here. I don't think it reached its target. So a couple of things you could have done here. I have this thing called target considerations. And for these big targets, usually I rather play the smaller, closer, more probable target and then play on continuation patterns if they show up. But if you decide to play this big pattern, you'd always want to check out for walls. And this is the last wall. A wall is previous resistance turn support, or support turn resistance. And right here, at this bottom here, at a bottom, break out. And that becomes, that resistance now becomes support. It's tested here even, and now that's support. So what you could do, if you don't want to be greedy, is you move your targets. You reduce your risk to reward. Or you reduce your reward, so your risk to reward is less good, but you augment your chances of reaching that possible. You augment the probabilities of reaching that possible target by placing yourself on the good side of the wall. And what happened here? See that wall? And after that, over time, it became a zone of congestion. You don't want to look at the bottom. Look, here's my ultimate resistance, my ultimate support. It's price going to go there. The actual wall starts where there's previous resistance or support, and it goes. It's a wall, and it goes down. It's thick, and it goes all the way down to previous support down here. So that's part of my target considerations. I have more on if you go on badcharts.com. In my how-to, a lot of tutorials there, and video demonstrations in the podcast sections on bad charts. Go check it out. So, okay, this is just a little recap of how I do it with my classic chart trading framework. And look at that, stage 2, woo, stage 4, beautiful stage 4, stage 2, and look at that. Right now, this is what is catching my attention, is this awesome stage 3, which right now is tracing out. Let me remove that one, delete alert. And right now I set my alerts for the monthly candle breakout 2527. And in case it becomes a stage 4 breakdown, I'm going to be looking at the 1928 as the breakdown level. And more intermediate right here, maybe the 2230 level right here for a breakdown on the monthly candle. So seems to be no man's land, closer to the smack in the middle. Yeah, closer to the breakdown line. But you got to keep an eye on this as a continuation move. We'll see. So what we're going to do right now, we're going to head over to our Stan Weinstein super duper setup. And remember ADX, I keep talking about it every time. Under 20, I'm in the stage 1 or 3. And look at that. ADX very low. Price action ranging very tight. You could use visually when you get good, you see it. If it's tight, the Ichimoku cloud kind of helps. It helps you if like the price action is going through the cloud and the cloud is getting tighter and tighter, like here. You know that you're stretching that resistance and support is getting really tight. And what do we have here? Okay, let's explode that. And so right now, here's my breakout line right here on top. My breakdown line down here on the weekly. Remember, on the weekly and on the monthly, it doesn't have the same support and resistance. Usually the resistance and support are tighter, closer to the price action on the monthly chart, because the wicks are encompass closes and action from weekly and daily smaller time frames. But the monthly chart said, nah, I'm not closing in the wick zone, I'm closing lower. And that's why it's a stronger resistance and support. It clears out all the noise from the intra candles, the shorter time frames. And here we are, 30-week moving average trying to go upwards. There's no red cloud above, no Ichimoku resistance. It's full steam ahead. Really keep an eye on this for a stage 2 breakout, continuation breakout from that stage 3. And if it goes down, well, you need a break below the green cloud. You want the price action to close here below that the support at 22. About the 22 level on the weekly candle chart. And there's some more, you might hit some congestion here from the monthly candle resistance at 1928, and then it could go down from there. Create yourself some backspace, move your margins, and just imagine where it could be. RSI sees smack in the middle. It's very tight. It's deciding, am I going up or down? Could go either way. Then that's when you got to get the hang of it. Don't pull the trigger. Wait for a crazy volume like this when this broke out or decided to go up. You want candles 4 to 5 times, twice the average of the previous 4 to 5 weeks. So just make sure that you get that up for that breakout candle. Definitely keep your eye on this one. These are the levels, and just keep that on your watch list, man. I like this one. All right. That's about it for today, guys. See ya.